Hi there, this is Alvin from Dr. Wealth. So today we're going to talk about the hottest IPO we have seen for like I don't know how many years on SGX, and that's NTT Data Center REIT. And there are many reasons why this is a hot IPO, a lot of interest in it. Right? So first is I already mentioned it's one of the largest since 2013. So it has been more than 10 years since we have this billion-dollar kind of level of listing in the SGX. And then number two is data center related, and data center has been probably the most premium real estate right now, and is still growing very fast, especially with all the AI demands that's going to come in. So data center REITs has been popular as well, right, among all the other REITs that's out there. And of course Capital DC REIT is one of the REITs that have performed much better, and so maybe investors are thinking that more data centers REIT means that there are more opportunities to invest into. And then the third is that GIC, which is a sovereign wealth fund of Singapore, is a cornerstone investor up to almost a 10% stake. So that's a very large endorsement from a reputable asset manager in the world. So, and fourth is the sponsor, which is NTT, right, which is a Japanese telecom company. It's pretty well known, right? Probably more for the older folks. Maybe the younger ones may not be. And even though we don't really use the services of NTT locally, but I believe that throughout our lives we have heard about this name, we have heard about this company. Therefore, it is a sponsor that with a lot of data centers assets that could eventually be pumped into the REIT itself. Okay, so that is also another thing to be positive about. And I think for investors, the most attractive thing is the 7.5% dividend yield that the NTT DC REIT has sort of like projected for annualized it for this FY. And going forward, of course, there could be a chance that this 7% can be sustained, okay, over a longer period of time. But let's look at some other things, right? Because I'm not going to repeat a lot of coverage about what this IPO is about. I would want to focus on a few things that you might want to take note. Okay, so the very first thing is that it is priced in US dollar. Most of the data centers in the REIT is US dollar denominated, and therefore it makes sense for the share price to also be denominated in US dollars. Okay, so as you can see, for the past 1 year, okay, in particular, the US dollar has weakened against Sing dollar, right? And if you take a 20-year view, you can see that it used to trade like 169, 170, the kind of level for USD versus Sing dollar, and now it has dropped to around 128. Okay, so there is the currency risk, right? Regardless whether USD is still the reserve currency in the world, there would be forex movements, there will be forex changes, and you'll be receiving DPU or distribution per unit converted from US dollar. So the fluctuation will affect the ultimate yield that you are looking at, especially if your wealth and your spending is denominated in Sing dollar. And point number two is important. Okay, so let me just zoom in for you. And this is the comparison. If we take a look at the data center REITs, the pure data center REITs, we have going to be 3 in SGX. And the closest to NTT DC REIT is actually DigiCore REIT because of their larger US exposure. Capital DC, sorry for the typo, right? It should not be a D, should be an L. Capital DC REIT has much higher valuation, right? If you look across, lowest yield, highest price to book ratio, and that's primarily because, if you ask me, due to the strong presence in Singapore. Okay, it does command a premium due to the lack of space to build more data centers here, right? So if you look at NTT and DC REIT and DigiCore REIT, right, so that should be the comparison that we are doing. And in terms of price to book ratio, you can see that for NTT DC REIT is trading at 1.05 times. It is not undervalued. In fact, it's slightly above the book value of the REIT, while DigiCore REIT is doing like below 0.7. Okay, so there is a significant discount to its book value. And in terms of dividend yield, NTT DC REIT is at 7.5%, while DigiCore REIT is at 6.9%. So some of you who are quick to observe, you will be asking, right, why is the NTT DC REIT dividend yield higher while DigiCore REIT yield is lower when the price to book says otherwise, right? Because if DigiCore REIT price to book is so low, the dividend yield for DigiCore REIT should be much higher. Okay, somehow it's still lower than NTT DC REIT. Later I'll explain to you some of the possible reasons. And the third is that the gearing ratio is rather healthy, right below 40% mark. And for the occupancy rate, we also see both are above 90%, but in this case, NTT DC REIT has a occupancy that's lowest among the three. So if you ask me in terms of valuation, right, so NTT DC REIT is probably fairly priced, given that it's pricing slightly above the book value. And yes, the yield is attractive, but the question is how sustainable will this yield be going forward? Okay, so the other thing that I want to point out, right, why the NTT DC REIT yield can be higher than the DigiCore REIT, I think for a few reasons, right? At least these are the two reasons that I found. So the distribution from NTT DC REIT, right, the 7+% is based on certain assumption, okay, for the next 2 years. And the first thing is that the manager, the REIT manager, is going to receive both the base fees and the performance fees in units. So they are not going to take cash. And the second thing is that the 100% of the distributable income will be distributed as dividends for the next 2 years. And thereafter, they will promise to distribute at least 90%. Okay, so these are exception for these 2 years. And what it means is that after 2 years, in the third year, the manager may start to take some of the fees in cash, and that will reduce the distributable income that can be given to unit holders. And the second thing is that they may drop the payout ratio for the rental income to 90% instead of 100%. And that will also again reduce the distribution per unit. So I would say that this 7+% dividend yield, it's based on probably the next 2 years. There is no guarantee from the third year onwards that this amount or this yield will be maintained. Okay, so that is something that I think investors will have to be realistic and do not just take the yield as a face value that is going to be the yield forever. All right. And number 4 is that some positive things, there will be rental reversion, and when they compare the average rent for the NTT DC REIT data centers versus the average rent, there's some room for them to increase the rent further. There's also some room to increase the occupancy rate as well. So all this would also help to increase the distribution per unit. But all this remains to be seen how well the REIT manager can execute, right, and get more tenants to pay more, right, in the coming years. Okay, but that said, it may still not be enough to minimize the impact from the distributable income should the manager start to take more fees in cash, as well as lowering the distributable income ratio. Okay, so all this again is not confirmed, right? So it has to be wait and see. Okay, so nothing is guaranteed. You must be aware of that, right? So one is that the customer concentration is real. So the very one customer, the top customer is contributing 31.5% of the overall revenue. Okay, one tenant, right, contributing to 1/3 of the revenue for NTT DC REIT. So to me, that is indeed really there can be a huge risk, right? The only thing that we should be content about is that at least this is an investment grade company, and it's not difficult to guess who it is, right? It's an automotive company, okay, in the US doing autonomous driving, right? So I think it's not difficult to guess, okay, who it is. And if we take a look at the top 4, it will be more than 50% of the revenue contribution. So I think that itself is a risk if the tenant decide to shift their data centers or lease less spaces. Okay, all this can be very impactful, right, to NTT DC REIT in this case. Okay, so other than that, I think that generally the IPO or this NTT DC REIT IPO is a fair deal, right? But just don't expect the price or yield to be stable after the IPO. There could be a re-rating based on the market sentiment, because offer price is what the investment banker think is fair. And if you look at it, it's slightly above the book value, right? And in the future, the NAV may also drop because if it issues new units to the manager in terms of payments, all these kind of things. Okay, so there's a lot of moving parts that you should be aware of, and not just look at the 7.5% yield. I know a lot of investors are looking at that number to base their decision on. Okay, it may not sustain after 2 years. All right, so it is the biggest IPO, so there must be some excitement, right? And it's a REIT and plus a data center hot topic. So I do think that there should be enough investor interest. I believe that IPO may be oversubscribed. And also that Singapore stocks have been hot. Okay, who knows? Maybe there's still a chance chance for some capital gain should the overall stock market sentiments become even more bullish. And overall, to me, I feel that this NTT DC REIT is more like a Digicore REIT 2.0. Okay, in this case, it has a lot higher yield, right? Because when Digicore REIT IPO, it has less than 5% dividend yield, okay? And the book value was also slightly above book value. And the offer price also slightly above the book value, right? But it has, of course, met some problems along the way, and now it's trading sub book value at around 0.7 times. I believe that this is a long-awaited IPO, right? We need more blockbuster IPO in the Singapore market to really rejuvenate the investment scene here. I hope you get a better idea what to do with this NTT DC REIT, okay, IPO, right? That will help you make an informed decision. That's the most important thing. Thank you for watching. Remember to subscribe to the channel, like this video, and I'll see you in the next one. Goodbye.